The start of this year really showed a shift from the slowdown in growth rates that was happening at the end of last year, which, as you say, probably was more to do with a rate hike through November and weaker economic data. The start of 2024 has brought along some good news around inflation. The cash rate was held in February. So in the same way that we saw this big boost to the consumer confidence index, an uplift of 6%, it seems to have translated to more confidence and demand in the housing sector as well. It's not just prices we've seen it, but the auction clearance rate was also holding really firm across the combined capital cities. It was averaging in the high 60% range compared to the low 50% levels that we saw at the end of last year.
So when the RBA starts cutting, as I guess the conversation is definitely leading to an expectation that that will happen at some point this year, do you think we'll see an even bigger price spike?
I'd have to imagine so, only because there seems to have been so much strength even off the idea of a peak in the cash rate and greater borrowing capacity. But a reduction in the cash rate would actually allow more finance to be accessed. I think there's a lot of prospective buyers who are renting at the moment who would be keen to get out of the rental market, make a purchase. So I can only imagine that when you pull one of those financial levers, you'll get a lot of transitioning from fundamental demand and rental demand into purchasing.
I guess one of the other drivers has been migration. So that net migration is likely to be smaller this year than last. So how do you see that affecting property prices?
To be honest, it might help to reduce the rate of growth in the rental market a little bit. The expectation is that we'll see net overseas migration, which was about 518,000 last financial year, come down to about 380,000 this financial year. But even then, if you look at the pre-COVID decade average, your average net overseas migration level was about 215,000 per year. So even though net migration is expected to ease, it's moderating from very high levels and it's going to remain above those historic averages. So it is persistent pressure on housing demand in an environment where supply of new dwellings is particularly difficult.
And potentially no more difficult than in Perth, where supply dynamics are key to driving the prices there. It's also, I guess, worth pointing out, though, that it is a city that is coming off a particularly low base compared to other markets.
Perth has been through some extremes to do with the resources sector. There was a large downturn across that market from 2014 all the way through to 2020. So really this market is playing catch up a bit. Again, the overseas migration position is rising across WA, but so too for interstate movements. If you look at net interstate arrivals in the year to June, it was sitting at just under 12,000, and the pre-COVID historic decade average was a net interstate migration loss of around 950 people a year. So the migration position has changed dramatically, and it's a real demand shock to that market. It's not something I think the real estate sector would have expected. It's not something councils or property developers would have expected. So for Perth, it is very much supply demand, but to the extreme, and that's what's pushed values around 18% higher over the past year.
The reverse is happening in Hobart, where we saw obviously a lot of migration to Tasmania during COVID that is now being reversed, and they've had a 12% price drop since the peak. So is it fair to assume that there are people potentially in Hobart now selling at a loss?
For very recent buyers, it's likely that they could be incurring a loss from resale. What you'll find is that if people can hold off from selling their property during a downturn, they will. So eventually that'll tighten the listing space and lead to a bit of an improvement. Even though we did see another month of decline across Hobart at 0.3%, that was improved from a 0.7% decline in the previous month. So this market could be getting close to flattening out, but as you say, it's a pretty dramatic response that the market has had to interest rate rises and negative net interstate migration.
Eliza Owen, great to have you on the program. Thanks so much for your time.
Thank you. Thanks for having me.